Clement Good Living. I have decided investing in some couple of stocks specifically for my real estate down payment in the next 5 years. Could you guys share your thoughts on this, please? I find this, for various reasons, incredibly risky. So if you are not completely set on the 5 years and you're not completely set on however much money you need, then big maybe. I wouldn't do it though. Here's why. First of all, I'm investing now for about 13 years. I bought my first stock, or I started investing 13 years ago, little more than that actually. And did some stocks do very well? So in the beginning, I only did stocks, right? Did some of them do very well? Yes. But if I compare this just with the overall stock market, ETFs and whatnot, then they didn't do well. And this puts me into the same category as 95% or something of all people that just lose by investing in single stocks. Because if you buy a stock now and in 5 years from now you made 50%, good for you. But if in the same time span the overall stock market did 70%, you actually lost, right? Of course you made a profit, but in opportunity cost you lost. You would have been a lot better off with the overall stock market than with single stocks. Now I'm just saying the odds are stacked massively against you. If you buy any single stock, could it work? Yes. Statistically speaking, it doesn't. And then 5 years is also an incredibly short term. So if you, stocks are just not for 5 years, I think. So single stocks, risky, and for 5 years, risky times two.
Yeah, I think I agree. You could lose your money like this, right? Or just even comparing stocks growing and then using it for real estate in most cases, right? You don't know. Stocks, you pitch in your money. Let's say you have a 10K or 15K. You put it into stocks to grow. This money could be gone tomorrow. Stocks are up
Depends on
and
the
up.
stocks, yeah.
Really, yeah, but I'm still waiting 3 years, right? So I'm more on the American market, but you're kind of still waiting, right? And you don't know where this is gonna go. So imagine you wait 5 years in this case, and things are changing. Interest rate might decrease or increase, prices might fall, might increase. So it's a completely different market in 5 years. And I wouldn't really mix this up, kind of.
So for the down payment and for the closing
Yeah.
costs in a time frame that is 5 years or less, I would probably go with fixed term or flexible savings accounts. We have some calculators on the website for this. So everybody hates that interest rate has risen, right? But these fixed term and flexible savings accounts have become incredibly good over the last year and a half. They're now at 4% and 5% interest. I would just do this because it's 100% guaranteed, right? It's a saving account that is backed up by the government up to 100,000 euros. So there's actually the risk of losing money is virtually zero, except the German government goes broke. I would rather do this than invest in single stocks, to be honest. If you want to invest in the overall stock market, then maybe do it with ETFs and maybe do it inside a pension level 3 that you don't have to give it to the bank in 5 years, but you can rather use it as a collateral for the
Good
long
point.
term to pay off your mortgage in 30 years or whatever. I think this is better than doing single
Yeah,
stocks.
absolutely. And even better for the bank. Yes, the bank will ask you what assets do you have. Obviously, if you have stocks, if you have ETFs, great. They don't recognize it as, for example, having a investment property, or even if you don't have an investment property, but you have a pension plan, way more.